This is the Cleveland Real Estate Investor Podcast. On this episode, Mike Ferrante joins us to catch up on the status of the real estate market in Cleveland, the dangers of opening schools and making the COVID-19 virus political, and more.
Okay, let's take a break and talk very briefly about one of our sponsors, Team Mike with Century 21 Realty. I've worked with Mike Ferrante for over 10 years. He's smart and his team is energetic. Mike doesn't show a house, he sells a house with proactive 21st century marketing, such as 3D showings, which during this pandemic is becoming a real game changer in the real estate industry. So if you want to sell your house fast and at the right price, call Team Mike at Century 21 Realty. Okay, back to our show. All right, hi everybody. We're starting into August. Seems like a lifetime ago that pre-virus. So, and with us, our favorite realtor and superstar in the real estate market in Cleveland, Mike Ferrante. Hi, Mike. How you doing?
I'm doing fantastic. Thanks for having me again.
All right. So it's August. I think the last time we talked about the real estate market on our last podcast, probably about 8 weeks ago, June, and everybody was assuming that we'd get into a lull before a potential second surge, but that is not the way it's going. People start realizing that's probably we're in for a long haul for the rest of the year. So given that, record low interest rates. So give me the status of or the temperature of the real estate market in Cleveland, Mike.
Well, it is still en fuego. Especially if you're a seller, the expectation that some people had for the market dipping just hasn't happened. And that's kind of what I thought. I thought it would stay strong, and it has, largely driven by buyer demand, shortage of inventory, and historic low interest rates. When you mesh all that together, even with COVID going on, you've got a crazy market where sellers are in charge, multiple offers, homes selling in a day, a week, and it's more of the same.
Plus, I think with the stock market being in transition and low interest rates, there are a lot more investors are flying around looking for deals, right?
Yeah. We talk about investors a lot on your podcast here, and those folks are still coming in droves. And it's, I think, partially what you said. Where else can they put their money and make this kind of return? Cleveland, in the Cleveland market, it's not uncommon to make 8 to 12% ROI on a real estate investment. All, depending on the area, of course, but because the investors continue to gobble up a lot of these lower end homes, it's eating up the inventory for the owner occupants. And so they're forced to go higher and higher on their prices.
What has been the sentiment of people now with the virus? Are you getting more and more people looking to live in a house as opposed to live in a condo, an apartment, rent?
Yeah, and I think we've mentioned this before too, but we're seeing an influx of buyers from big cities. We're seeing people moving out of condo complexes where everyone's on top of each other, and they want the home, the single family home with some room. They want the in-law suite. They want to get their parents out of the condos, out of the places where they're living on top of people. So the additional living suite is becoming a thing again. That's a desirable feature. So absolutely, the single family home with a little bit of land is cool again.
Right. Well, and also I would think you're looking at people that are working from home, so they're going to want an office someplace.
Exactly. I just had a conversation with an investor today, a guy who's rehabbing a house, and he's going to gut it down to the studs. And in the configuration done by the architect, they specifically included a home workspace in addition to the office. So you've got an office on the first floor, and on the second floor, you've got a home workspace, because at least for the foreseeable future, the kids are going to be doing school at home.
Right. Yeah. And you know what? That whole kids going back to school. I saw a picture yesterday about a school in Atlanta area, and the kids were all packed into the hallways. They had no masks on, and
wow,
a kid took a picture of that scene, and the picture went viral, and guess who got suspended?
The kid did?
The kid did.
You're kidding me.
Yeah. The kid
I mean,
did.
what's he?
Not the people that were walking around without a mask. And it's just amazing.
That's
So,
insane.
and all that should inform people listening is the more the virus becomes a political tug of war, the longer it's going to last. It's real simple, and the more the economy is just going to be in a depressed state because we're not getting on top of it. We're making it political, which is just absurd.
Like, I just
So
got to tell you that story shocks me. As you were telling me the story, I'm thinking that kid's a hero. You know,
yeah,
he's saving lives because he's letting people know that they're not these administration is not doing what they're supposed to be doing. He's saving lives. And then when you told me how that story ended, I'm flabbergasted by
yeah,
that.
yeah. Well, same thing could be said about Fauci. You know, they're getting death threats on his family.
Well, same thing happened to Dr. Acton in
Yeah,
Ohio.
Amy Acton. So, but what it does is it gets back to the virus is going to be around. We're not doing serious national mitigation, which means the economy is going to be depressed. Investments in real estate is going to remain strong as a result of that. And people are going to want to own a house, and it's cheaper to own a house than rent, right?
On a monthly cost basis, it's cheaper to own than to rent right now.
Well, let me just give you an example. You get your calculator hummed up here, Mike. And we've got we just picked up a house. Our company just did from a guy who we've been managing this property for 10 years. And I think you're familiar with that house on Fenley in Cleveland Heights. You sold a property, a couple of houses up that just lasted one day. Well, here's a guy who got underwater in 2009. He bought the house in 2006, was married, went through a divorce, got relocated, couldn't afford to write a check to make up the difference of what he owed. And now fast forward 11, 12 years later, after going through rental and getting about $1,100 to $1,200 a month, which was barely making his mortgage and tax payment. And then on top of that, the guy had to continually write checks for maintenance, new sewer line, new roof. I mean, it was just, to him, he couldn't wait to get out of this house. And for investors out there, that is who you're looking to buy from. You're looking to go in and buy a house that is owned by somebody who's been forced to rent. And maybe you can pick it up. You can make them an offer for what they owe now, and they would jump at it just to get out. And that's exactly what this guy did. He could not wait to get rid of this house. It was a ball and chain around him. It was a metaphor for his failed marriage.
I had a name for those people, Mike. I called them reluctant landlords. They couldn't sell, so they had to rent.
Reluctant landlords were everywhere. And then you had the other type of landlords, which is called the walkaway landlords, where they stopped paying on their mortgage. And they just kept collecting money, and they didn't pay the property taxes. They just let it fail. And meanwhile, they're just collecting rents from some unsuspected tenant. And then all of a sudden the bottom falls out, goes through foreclosure, and there's that poor tenant in there who didn't know what hit him.
Yeah.
That's another phenomenon of the post crash in 2008. But okay, you've got your calculator humming. Now our current tenant is paying $1,275. Now the house, if we sell it to the tenant for $125,000. What would be their monthly payment on a 30-year loan? How much would they have to put down, and what would be their ballpark monthly payment?
So let's say they're doing FHA, 3.5% down. I'm using 3% as the interest rate, which I just heard someone today getting a 2.65. So 3%, that's if it goes up a little bit. Mortgage amount, let's just call it $118,000. Principal and interest, $497. Wow. So you add on taxes and insurance to that, so let's say, taxes are probably $350, insurance is probably, $75 a month. So that's that's under $900 for a mortgage payment with taxes, interest, principal and interest.
Okay. And 3% of 125,000 is how much?
Oh, I did 7,000. The actual amount is, actually the mortgage amount would be a tad higher. 4375 is that down payment. So
Wow.
FHA 4375 down, and let's say they had to borrow 120.
Yeah.
So the payment goes up to 506. But so you're still under $900 to own that
Wow.
house.
Yeah. So they're paying 370. They could pay. Yeah. So their rent payment will go down. Now you still have to allocate for repairs.
Well, yeah, that's the key. When you're the homeowner, those risks fall on you.
Right.
The furnace goes out, the roof leaks.
Right.
You're not calling a landlord anymore, but now it's yours.
Right.
And there was a study done about the correlation between home ownership and wealth. And it's not just about the equity that you develop in your house, but it's also the mindset. When you
Yeah.
own your home, people have a different mindset, and so that's what they believe the correlation is, or why there's a correlation between home ownership and wealth.
Yeah, and that wealth's going to happen as long as it's grounded in basic economics and reality, as opposed to the bubble we saw in 06, 07 that led up to the crash.
Well, like you said, you talked about people using their homes as ATM machines. If you're an irresponsible homeowner who just keeps refinancing and taking cash out, removing your equity, well, that's not how you build wealth either.
Right. And I think one thing that's going to help the housing market is going to be the fact that people are not using their homes as ATMs to finance colleges, finance some trip to Vegas, finance this, finance that. People are not spending money. They're saving money. They're socking it away. They're paying off their credit cards. I mean, I've read story after story in the last month as economists are just looking at awe of the fact that people are not using their credit cards to survive. They're actually paying down their credit cards. I mean, those people that are still working. Now, I'll be interested to see how it plays out in the next couple of weeks with the next round of stimulus, to keep the economy going. But for now, this has been a major wake-up call. I think it's going to impact higher education in the college market, especially. College and travel and leisure are never going to be the same after this, because people are going to really ask themselves, wow, I just spent a year off and I don't have $50,000 in debt.
Yeah.
Okay. And I'm and I'm doing fine. And they're going to question whether they can get the same thing as online learning as opposed to sending their kids to some high-priced university where all the kid does is party.
Right. Yeah.
I mean,
that's
really.
a great point.
So there's a lot of subtle, not so subtle changes that are coming. But you still have to make the right buy in the right area. What do you see or sense is ascending neighborhoods in Cleveland, Mike, where an investor might want to buy or a first homeowner might want to buy?
Well, I'm still a fan of all the inner ring suburbs. That's everything from Lakewood, although you're starting to get priced out of Lakewood, to Parma on the west side, and then east side, all those inner ring suburbs from Garfield, Maple, Bedford, Lyndhurst, Cleveland Heights, South Euclid. I love all those inner ring suburbs because they did take quite a hit during the recession, but I knew they would bounce back. Everyone figured that they would. And I think that's where the value is for investors still. As you start getting out in the suburbs further, it's harder to make the numbers make sense, both for a buy and hold. Your rental numbers
Right.
just don't warrant the higher prices. And it's harder to find flips nowadays too. So if you've got anybody listening who's a fix and flip type investor, you can still find them, but they're getting harder and harder to locate these great deals that have the margin to do a flip.
Well, and also getting back to the whole college aspect, you're getting the whole change in how colleges are teaching them. We just got a request from four people who are going to Case. Two of them are interns, two are in grad school, and Case isn't doing student housing. They got to find a place. So all of a sudden, you've got, Notre Dame College, you've got John Carroll University, you got Case, you got Cleveland State. those, especially with Case, where people were living on campus, now they're looking for places to live off campus. So, you know, you get an area, my favorite area that I've been banging the drum on is Forest Hill. You know, Brooke just bought that house on Wyatt, that Rockefeller mansion. I mean, he went from that small house on Kingston to a mansion. Have you seen the inside of the Wyatt house?
No, I've not seen the inside yet, but I know the neighborhood. And when you say mansion, there's a reason they call them Rockefeller mansions.
Yeah, I mean, he's going to a 4-bedroom, 3.5 bath with a den, center hall. I mean, it's just night and day. Drive-in, underground, garage. So yeah, he's just kicking himself. And I think you start publicizing. I mean, Forest Hill could be the next Ohio City, the next Tremont. The next, and you know, and then you got to wonder what's going to happen with Ohio City and living downtown with the virus. What's your thoughts on that?
I think Ohio City and Tremont are well enough established that they're not going to collapse, and there's still enough new construction going on in those neighborhoods that I think those neighborhoods are still viable. You know, I was just looking at sales today. I've got another investor who bought a house that he's going to renovate to, you know, like new construction levels. And can you believe new construction in that Ohio City Tremont area is up to about $220 to $230 a square foot, which for those of you who don't know what the Cleveland market bears, like that's the same kind of numbers we're seeing in the high-end suburbs like Pepper Pike and Orange and Beechwood.
Yeah.
And even the old houses that are renovated to new construction levels are selling for, you know, 160 to 190s per square foot.
Right.
Which is just unheard of.
Right, exactly. So
I know your point was, you know, those areas where people are living closer together, are they going to take a hit? I think Ohio City and Tremont are, yeah, they're pretty close together, but it's not like living in a condo complex where, you know, you're sharing a fitness center and really, really on top of each other. Those areas don't seem to be suffering just yet.
Yeah. Well, you know, this virus is going to be around, but it's not going to be around forever. And I think you've got the whole life science health industry, which Cleveland is way up there. I mean, that's going to just add another layer of attractiveness to Cleveland as a place to live and invest in. And then, of course, you know, when you can work remote, you know, I mean, why live in New York? Well, you know, the restaurant scene's closed down, you're living on top of each other. Maybe it's time to think about relocating back to your hometown. I'm seeing that a lot of people coming back to where they grew up, to Cleveland, coming back from New York, Chicago.
Well, even Florida. I have family members who moved to Florida 30 years ago, and they're up in years now, and they're talking about moving back to Ohio.
Yeah. So, all right. Okay. Well, that's, I think let's wrap this up. So the temperature, at least for the real estate market, is still hot.
Sizzling hot.
En fuego. All right.
Yes.
Okay.
One quick comment. During that section where we were talking about colleges and you know, parents may be questioning sending their kids off where they're just going to party anyway, I want to just comment that Amari was suspiciously silent during that part.
Yeah, no, that's why I didn't go.
Okay.
Just because I already knew what time it was with me, so save myself the debt.
Well, Amari, are you watching the travels of Brooke as a homeowner? Are you kind of a fly on the wall, looking with some interest?
You know, actually, I am, and I might actually pick his brain a little bit more just on his experience and. Yeah, just talk to him a little bit more about that. It's a little inspiring. Yeah.
Yeah, I mean, when you think about what you're paying now in rent versus what you would pay to own, I mean, right now it's pretty comparable for your own house. So.
Right. Yeah.
So.
Yeah. Just gotta study up a little bit more on the process and.
Yeah.
Yeah.
Okay. All right, Mike. Well, we'll get the next reading after Labor Day as the election heats up and see if there's any, you know, updates on the second round of stimulus. So until then, everybody wear your mask, wash your hands, keep your social distance. We'll talk later.
Bye now.
All right. Thanks, guys.
Thank you for listening to the Cleveland Real Estate Investor Podcast. Find more episodes at www.riley-properties.com or find us on your favorite streaming services like SoundCloud, Apple Podcasts, Spotify, and more.